Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We were going to have a conversation about the harvest season in Waterloo, Iowa with April Hemp. We were talking about the commodities markets with Kyle Bumsted and Steve Georgie from Allendale Incorporated. Otherwise, this is your rural news sponsored by AgriGold. The Farm Bill is probably going to have some concerns about the passage. There is a lot of ag groups have some concerns about the Farm Bill and the farm economy as well. This week is going to be a farm team in Peoria and DeKalb from the University of Illinois Extension, John Acalsi and Nick Paulson. They were talking about the cash markets and Brazil planting season in Peoria, Illinois. All right, we have a lot of demand for beans. According to the world supply and demand, we were going to move beans in China and Mexico. This is your rural news. We were coming back with April Hemp. We were going to move on to be having a conversation about the commodities markets and Brazil planting season in Goiás and Parna, Brazil. We were talking with Kyle Bumsted and Steve Georgie from Allendale Incorporated. We were welcoming Steve to the show. How are you guys?
Doing great today. Thanks for having me on.
Doing great, sir. Glad to be back.
Let's begin with our discussion on the planting season in Goiás, Brazil. How are things with the planting pace? Start with Steve.
Planting pace in Brazil has been it's been good. We got the crop in the ground for Brazil. Argentina, though, 65% planted currently. That's for corn and for soybeans. But Brazil, though, do we start getting a little concerned about moisture? We're not quite there yet. We're 15% behind moisture levels from what we typically would be at as far as Brazil. So something to watch as we go into January and February. It's going to be extremely important to kind of keep these rains going at this point. But planting pace looks good. Things look good. Their numbers look good and strong. But that all can change here as we get into January and February if we don't see these rains materialize.
How is the weather in Goiás, Mato Grosso, and Paraná?
The weather there is looking pretty good yet. So as far as the markets don't seem to care as of yet. We are seeing Argentina with adequate moisture at this point. We have a good setup for Argentina and Brazil at this point. So right now, as far as South American weather, the market's going to have to wait to see as we go into January and February. What do we do? How do we finish this crop? And do we continue to see these rains? They're going to need to see these rains continue in order to get some of the crop estimates that they're projecting here at this point. We're going to need to see that stay strong here as far as moisture. But as of current, things are pretty good. Brazil, though, down about 15% overall as far as total moisture that they need. And that is since September, since they started. But Argentina looking pretty good here at this point.
Kyle, how does the corn futures for this planting season in Brazil?
It's a very good question. And when it comes to South American weather, there's still a problem down there. A lot of folks are saying they've got adequate rain. They're saying that things are looking good. But if that were the case, we wouldn't have such a narrow carry in some of these deferred futures as far as looking out there. We've got about 3 cents carry between May and July, and when you look at that May-July spread, the reason I'm looking at that is because that's when you're going to see the bulk of South American harvest take place in the corn market. Same thing in the soybeans. There's 10.25 cents carry between May to July. So that says to me and to the commercials that they're getting some coverage on out there. And that's why these funds have probably kept a little bit more length in corn this time of year than we normally see, because we are having some weather issues down there. And there's fundamentally that's very bullish when you get carry out there at 3 cents May to July. If that thing were to go par inverted, which today there were a lot of May-July corn spread options bought there at the even money mark. They were paying about 4 cents for those. There are several thousand of those bought, so there's a commercial likely getting some coverage on out there for the upside. Somewhat in soybeans, there's a few CSO calls bought there as well too. Not near as many, but there's still an issue down there in South America as far as weather is concerned, or if they're looking long term at our demand picture here in the U.S.
How is the March corn on this afternoon?
March corn this afternoon closed down 1.5 pennies, and right now, I mean, we're entering holiday mode. We've basically got a range between 440 and 450, and it looks to me like we could trade that. If we take out 440, then we're probably going to go down to 430 and test that area with support down to 429.5 area. And then if we break above it, we're probably going to test 451. So it's basically locked in a range right now, and trade's starting to thin out here ahead of next week's holidays.
Okay, you guys. We are watching the beans markets, especially in the January beans. What is your take on the supply, Steve?
You look at what USDA's done for corn, and they've kind of narrowed up the supply here. I think for beans, the spread's kind of telling the story yet too. I mean, we do have some bull spreading going on. January contracts staying pretty firm, hanging near these lows that we've had. But it's one of those things where we've seen some stronger demand currently. We sold some beans today to China, and we continue to see some stronger demand out of these beans in a time frame where we are not the cheapest. We're currently about $20 to $30 a ton overvalued versus Brazil, but yet we continue to see this demand come in, and we see that as well. Yesterday, I know we did have some crush numbers that were out that were kind of disappointing from what the trade was looking at, but still very good overall. We're starting to use these beans more domestically, and we're starting to see some of these exports just continue. And I know that we may be a little bit more token business right now to China as far as exports. But the thing is, though, things still look good. The picture, if we can see corn firm up and we see the wheat market firm up, does that firm up beans too? I don't know. But we also have this picture coming up here with tariffs. And I think that's more of a market headline type issue than anything. But we'll need to see what happens here as we change our administration after that January 20th. So, but as of right now, you look at that January contract hovering near these lows that we've had. I know we made a new low here again today, but we need to see how that progresses here and how we finish out the week as well.
Did you got the CONAB for Thursday morning, Steve?
I'm sorry, what was the question again?
Did you got the CONAB for Thursday morning, Steve?
CONAB.
Oh, I don't. Do you have that, Kyle? I don't have that in front of me.
No, I don't.
Yeah, I don't have that in front of me for CONAB's estimates. Sorry.
What are the wheat planting in Nebraska, South Dakota? What's going on with Ukrainian wheat demand? Kyle.
It's a good question. There's a lot of question about how much demand we're going to get from other countries, as Ukraine is a big exporter of wheat and corn. Right now,
how is the cattle markets for today's cash markets with Mexican sorghum and bird flu outbreak?
It's a good question. So far, from what I've got with contacts down there along the border and with TSCFA and some other organizations like that, from the sounds of it, we're going to get that border opened up. I'm not sure which side of the first it's going to happen, but I do know that the pens are up and they are getting inspected as we speak. We typically import between 27 and 35,000 head of feeders a month come across the border here from Mexico, and those cattle are still there, but they're not all going to come across at once. So they're going to probably get dribbled out after. If we say we start the first of the year, it's probably going to take several weeks for those cattle to make it across the border in the entirety that they're backed up down there. And those cattle are backed up, yes. And these are that 3 to 8 weight cattle down there. So some of those cattle will be ready to place in grow yards, and some of those cattle will be almost ready to hit the feed yards once they come across. So I do look for the placement numbers to have a little bit of an effect on it once we get through that glut of cattle when it comes across here. As far as cash news goes, feeder cattle, they've been fairly stout. I was a little disappointed in the cash sales yesterday, even though the index is higher from what I had seen and what I'd witnessed and what I'd heard from order buyers out there. I was a little bit disappointed here as far as what the index is going to do here today. Now, on the cash side of things here, I'm looking for a steady, firm cash this week yet still. Box beef is still going to be on a roller coaster here. We're going to get some quick ship business here from some of the end users and retailers here before the holiday. So you're going to see that box beef market all over the place here for the next 3-4 days. And then once we get past Christmas, there will be a little bit of quick ship buying there too. There's been a little bit of skew, I guess, in price with choice down yesterday a few cents, and select was up over $5 both the morning and the afternoon run. And most of that's been quick ship business. And I say that select because people are switching to a little bit cheaper cuts of meat here. Christmas isn't always a big beef holiday. I know a lot of folks have prime rib, but it's not typically a big beef holiday.
How is the cash markets in north of the cash trend?
As far as the cash markets go, last week would be a new high. I did see some cattle today at some of the regional stockyards, like Yankton up here. They were selling fats for $2. I don't know if that's going to happen out in the country this week, but there are some certain classes of cattle, non-implant, and some certain qualities of cattle that are bringing decent money yet so far this week. So a little bit of nervous here with the amount of non-commercial money that's pumped into this cattle complex right now as far as the funds go. If we see them start to take profit, and they can take profit just because, we could see the balloon deflate quite a bit. Well, I think something that we need to keep in mind moving forward here, as Steve mentioned, the change in administration coming to the White House and how it's going to affect some of our export business moving forward too. So I'm a little bit nervous. I don't want to say nervous, but we've been through this before with this administration, and howbeit we've got different people in this administration now, so that might help things out. I know there's a lot of scuttle about the farm bill being passed, but really, in all actuality, you can look at that. A lot of that goes to food stamps as well, too. A big majority of the farm bill is due to a food program. So I'm really not reading much into that either as we move forward. But I strongly suggest for the producers out there to be doing your year-end tax planning and things like that, getting that out of the way, which obviously most are. But also get your plans ready for next year. Sharpen your pencils up, boys, because it's going to be quite a ride the way it's shaping up so far.
Yeah, and to piggyback off what Kyle's saying too, just to mention this administration and what we had done basically 2016 to 2000, well, there was a lot of headline trading, right? We've got the markets right now that are very, I don't want to say more sideways, maybe quiet as far as grain markets, but we're going to get into a point where we're going to start looking at headlines again. As this administration shifts, it's going to be what do we do, right? Tariffs right now are the things that we want to talk about, but is it going to be more than that? It'll be more geopolitical. What are we doing with Russia, Ukraine, right? What's going on there? What's going on with demand around the world? And what's going on in South America? Certainly things that need to be watched as we get into next year. But we're looking for things to move the market. This may be something that can definitely do that. If we start seeing some of this, instead of just being talked about, we start seeing some action being taken. So certainly back that up with Kyle had said. I guess if we're looking at corn specifically, we've got corn that's trying to find a stronger footing. If you need to be looking at if you need to be making sales as far as the producer side, and you need that from a cash flow basis, you may want to look for breaks as opportunities still to be finding some kind of reownership. Maybe that's on the board, however that needs to be. but it's something that you may want to look at trying to carry some of that reownership as we go through that January report. We had seen USDA chop 150 million bushel for export sales off this last report. We're sitting just over a 1.7 billion carryout. That does suggest that prices could go higher. Now, I say could go higher. It's something that we need to see some demand. We're going to need to see a lot of things kind of pick up because USDA just made a big swoop from that pencil. But it is something that the market right now probably going to find some decent support if we do break back here a little bit. So if you are looking at making sales, find ways to still reown that crop, whether or not it's buying calls or whatever. But something like that, look at that on breaks right now. The markets are rather quiet, but we can see this market still continue to firm up if we see some more excitement and we see this continued demand really take place as we get into next year.
Thanks, you guys, on the show. I enjoyed our conversation.
Thank you for having me on. I really appreciate it.
You bet. Thank you, sir. Good to be back.
This is Kyle. March feeder cattle dollar plus 1.900, closing at $258.275. February live cattle dollar dash 225, closing at $189.750. February lean hogs dollar dash 350, closing at $183.200. March corn minus one single quote for closing at $4.43 single quote for. March soybeans minus 7 single quote to closing at $9.78 single quote 6. March Chicago wheat minus 5 single quote 0, closing at $5.45 single quote 0. March KC wheat plus 6 single quote 6, closing at $5.52 single quote 4. Closing quote provided by Kyle, our Bumsted branch office manager, Erickson, Nebraska 308-708-7340. Important date. Thanks to our friends from Allendale Inc. Thanks for listening to Back Roads of Illinois. You can listen to our show on YouTube and whenever you get your podcast. This has been Back Roads of Illinois. I am Cesar Delgado. Have a good day.